Okay, spent some time verifying data. I noticed a lot of data anomalies on the thinkorswim platform when it came to powering the QuantAlerts AI indicator. And of course, an extension of that would be the real-time alert service. So I've been going back and forth with Charles Schwab for an extended period of time, and I think we figured out why I'm seeing some data anomalies, and looks like we're going to have a fix in place. I see many people on various forums complaining about thinkorswim data. That's unfortunate. I would think a company like Charles Schwab, with all the money they have and the amount of time that they've had clients on the thinkorswim platform, should have the data feed at an exquisite level, but it's not. That's okay. It's pretty good, and now I think it's going to be even better versus what I was seeing in testing after going back and forth with somebody that really knows the platform well within their company and getting discussions with the group that manages the data internally. So that was big. I had to have that working to make sure that the indicator can read the data right, and some of the extraneous wicks that I was seeing on many, like, core instruments, was problematic, and we think we have that figured out. So anyhow, the other big thing that I've been working on, and that's what I want to talk about, is I've decided to put my new Fractal dynamic range indicator, and it's more than just an indicator. It's an indicator and a data and analysis type of item. I'm going to add it to the Quantar platform in addition to the platform that I'm building it and working on completing that. So let's talk about that real quick. So the way that some users of Fractal tools, like the purple indicator you see on price, the way that some have recently developed in, let's say, the last year, Fractal analysis tools of the market, I've looked at them and they seem to have a weakness. And here's the weakness. If the market is in an oscillating range, so let's say the QQQ, let's say we're looking at a 15-minute chart, not a 5-minute, but let's say the QQQ in a 15-minute chart, and I'm looking back like 3-4 months of time, and the market's like that, that's a pretty good edges of the recent range to look back and measure. Where the challenge is, that's what I call a static range analysis. It's statically looking back and determining the range, nothing special, no special math needed. So what I'm noticing in some of these recent Fractal tools is they've built the tool and they're looking at the data. Well, they're using the Fractal math, I think, one part of it a wrong way. There's a different way they should do it. But they're also, I think, trying to come up with an improper objective. So the improper objective is trying to determine a percentage that the market would trade back to the mean as a mechanism to define where are the edges of the recent price action. So trying to determine a percentage of probability that the market would go back to the mean versus the market going up some defined distance. So that's a probabilities-based look. I think there's a smarter way to do it that actually makes the indicator build a lot more reliable, but it works better in conjunction with using fractal math in a way that I think is smarter than the way everybody else is using it. So it's kind of like I made 2 changes and wow, did it work. So here's the key. What happens if you're in a market that's oscillating in a range in a heavy uptrend? Maybe you're looking at NVIDIA stock or Apple stock when it's having a run, or maybe the markets are having, all the indices are in a big uptrend last 3 months. Now you need to see what's the edges of that current market from a dynamic price movement standpoint. Or what if the market goes into an extended sell-off period? I want to know where the top side of the range is and the downside of the range. That's the problem with the way others are doing this. They show you data and make it look good here. Their system doesn't do a good job. If you're going to try to work the extremes for mean reversion trades, it's going to keep going against you, because the way that the fractal math is being used and the way it's analyzing price is missing something that's really important. I'll kind of leave it at that. So what I'm going to be doing, and I'll give a little bit of details, but not all. So let's say today I'm right here, and I have a look back. Actually, let's scrub that. Let's do something different. Let's say that I'm right here today. This is today. I'm right here. I'm right by the mean. This hasn't played out yet. And I set in the settings for my fractal dynamic range indicator to look back to, let's hypothetically say this is January 1st of 2024. So I want to know from today in October back to January, what are the dynamic edges of the market? And how I'm looking at it is I'm looking at how many bars have traded and what percentage of bars. So my look back would be the entire year, and I'll say what percentage of bars, or I want the settings to be that when the market comes to the dynamic edge of the range, any trade back to the mean would happen before the market would ever trade in an additional, let's just say 70 points. So in the settings of the indicator, I can define what is that additional movement away from the mean from where price is currently at, and look at trade back to the mean. So that would be my unit of risk. There's my unit of reward. So let's say I'm right here, and over the days of 15-minute charts, suddenly the market makes an extreme move, and it'll come up to a level where the indicator says, hey, you're at the 7.2 or whatever it computes, you're at the 7.2% level. That's go time. Now we're ready to work a trade to the short side, that the probabilities of it going up are very, very extremely low in relation to the probabilities of it going back to the mean. But what I'm doing, this 7.2%, is how many bars. So that would mean 7.2% of all bars looking back are outside of my range set by the computation of the fractal math looking back at every bar, and the other, the other 92.8% are all inside of the upper and lower edge. So a quick run back, the indicator right away will tell me, hey, for the NASDAQ going forward, it's 7.2%. So in this case, let me clean this up. The market's traded forward, and let's say right in here, the market comes and trades above, and the indicator trades above the 7.2% level. Now I'm in the area when the indicator hooks down or starts trading down. I would engage the trade, or even better, I'm just going to use my QuantAlerts AI tool, that once I'm outside of the range, the first short signal I get, I'll use the already determined maximum amount of risk that I need to worry about anytime 7.2% of the bars, or we're in the area where only 7.2% of every price bar is, at the very edges, versus the 92 point whatever percent, 8% that are trading in the range. So it'll be really easy for the indicator to do a simple look back and right away know what the level is based upon the settings and how much range or how much distance in price I'm willing to risk. So I'm using the fractal math different, and I'm also not looking for probabilities just as a way of determining when I would possibly go short or go long. the way others are looking at the data. In this case, it never even went down there, even though price traded there for a period. I'm using the amount of bars. And when I found out, that works really good. If you get the fractal math looking at the data the right way and the bars the right way, not only looking at distance from the mean, but time. So we're looking at distance from all the price action to the mean and the amount of time. So it's almost like a triangle. I'm looking at distance, and I'm looking at the distance, and I'm looking at the time. You know, and how many bars did it take to get me there? How many bars take to get me there? How many bars did it take to get me there? So that all, if it's part of the computation, can then give you very accurate, defined dynamic edges of a range, whether you're trading crypto, stocks, futures, you know, whatever you're trading, I can now define the range. And the nice thing is I can put this on pretty much any time-based chart and define the range for that particular instrument, for that particular time frame in relation to whatever my look-back period is. So a guy could go on the ES or the YM or the NQ or the QQQ or whatever, on whatever time frame you want to trade, and it will help you know at all times where the edge of the current market is. Now, it's not necessarily to just do mean reversion trades at the edges, but let's say you're trading Apple stock and you're accumulating in a running uptrend. When you get to the edges on the lower range, you can be a buyer as your add position to add to any inventory you're already holding from lower levels. So you're adding, and when the market goes to the other side of the range, you know where to. So it's all about defining the dynamic edges of the range regardless of instrument and time frame. I'm going to put it in TradingView. Things are about to accelerate next week, and more updates on the way. So great talking to you guys. Wanted to show you what I was working on, but getting ready to start accelerating the program. I'll be working on stuff all weekend and getting ready to really ramp things up and get this launched and rolling heavy all next week. So there you have it. If you have any questions, let me know at quantalertsai@gmail.com. Talk to you all later.